Ladies and gentlemen, good day and welcome to Indoco Remedies Limited Q3 FY23 earnings conference call hosted by JM Financial Institutional Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from JM Financial. Thank you and over to you.
Thanks, Yashashree. Good afternoon, everyone. I'm Cinderella Carvalho on behalf of JM Financial. Welcome you all on the Q3 FY23 earnings Concall of Indoco Remedies. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to host the call and looking forward to have an insightful interaction on the earnings with the management. Today from the management team, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Pramod Ghorpade, Chief Financial Officer. I now hand over the call to management for the opening remarks. Over to you, Ms. Aditi.
Good afternoon, Cinderella, and thank you. Good afternoon, everyone. And considering that we are meeting for the first time this calendar year, here's wishing all of you a very happy and healthy 2023. 3 quarters of financial year 23 are behind us. This year was always going to be very challenging for all businesses and for pharma in particular. Both the head and the tailwinds of COVID have receded. Geopolitical events continue to disrupt macroeconomic factors globally, and in India, inflation and the consequent repercussions of it are having some of the other impact on business. In these very challenging times, it becomes all the more imperative for us to focus on fundamentals. I'm happy to share good performance by India business this quarter. Despite respiratory and anti-infectives, which are key segments for our business, which do not contribute in Q3 and have not contributed greatly, we have still delivered a 13% growth in sales. Our subchronic segments like stomatological, GI, vitamins, minerals and nutrients have all supported us well. New introductions like Noxa, Dropizin, Subitral continue to add value, while Noxa maintains its position as a market leader in the ozenoxacin segment. In the international business, a robust growth in US and a good growth in Europe on a Y-to-Y basis has helped the company record a close to 18% growth in revenues for the third quarter ended December. Across Indoco, our journey of super transformation continues. Post the SAP S4HANA implementation in a record time of 7 months, digitization and digitalization of the Indian sales function has started, with the field sales officers being given Apple iPads for detailing to doctors. Since times immemorial, doctors have depended upon medical representatives or field sales officers to stay updated on new treatment options available to them. The digital initiative will allow our salespersons to provide the most updated information to doctors as and when they need it. I'm confident that our people will use this advantage to the fullest and help us garner greater market share in India for our products. Some of you must be aware that the much awaited FDA audit at Plant 1 was concluded a few days ago in Goa. While we have been issued 9483, I feel confident that our technical, quality, compliance and operations teams will work closely with the regulators to resolve the issues identified and further improve upon our quality management system. Recently, the senior and second-tier management teams at Indoco met for a strategy conclave. I feel very confident now of delivering on the big, hairy, audacious goals we have set for ourselves over the next 5 years. It will indeed be a very exciting time for us, and I look forward to sharing small and large success stories with you in times to come. In the board meeting concluded this morning, an ESOP or employee stock option plan covering several Indocoites holding key positions in middle and senior management of the company has been approved. I feel this will further motivate them to contribute their best and participate in the company's success in the years to come. This is all from me. I now hand over to our Joint MD, Mr. Sandeep Bambulkar, who will share highlights of the financial performance of the quarter with you.
Good afternoon, all the participants. Hope you and your family members are all safe and healthy. Let me first begin with the business highlights. Net revenues of the company grew by 17.8% at rupees 410.6 crores compared to rupees 348.6 crores same quarter last year. For the 9-month period ended December 22, revenues grew by 9.8% at rupees 1210.10 crores as against rupees 1102.4 crores. EBITDA to net sales for the quarter is 15% at rupees 61.7 crores compared to 21.1% at rupees 73.4 crores. EBITDA for the 9-month period is 18.2% at rupees 220.1 crores compared to 22.4% at rupees 246.5 crores. Other operating income includes exchange fluctuation, gain/loss, and export incentives. Exchange fluctuation head includes mark-to-market impact, and second, realized/unrealized exchange fluctuation. In Q3, net amount on these two components is a loss of 14.03 crore. MTM gain has reduced because of substantial swing in foreign exchange rates, particularly the British pound and euro. EBITDA without other operating income for the quarter is 17.9% at rupees 73.6 crore compared to 18.4 crore at rupees 64.3 crores. EBITDA for the 9-month period with other operating income is 15.8% at rupees 191.6 crore compared to 19.8% at rupees 218 crore. PAT to net sales for the quarter is 6.8% at rupees 27.9 crore compared to 9.5% at rupees 33 crore. For the 9-month period, PAT is at 9.6% at rupees 116 crore compared to 10.4% at rupees 114 crore. Earnings per share for the quarter is rupees 3.03 compared to rupees 3.58. For the 9-month period, earnings per share is rupees 12.59 compared to rupees 12.39. We continue our super transformation journey, and with the adoption of the new technologies, we recently went for Ariba, the electronic platform for procurement, has also introduced iPads to our sales force. Now in the Indian pharma industry, the Indian pharma market is valued at rupees 46,840 crores and has registered a growth of 11.6% during the third quarter of FY22-23 against similar third quarter last year. During this quarter, Indoco has registered sales of rupees 312 crores with a growth of 10.5%. On the IPM, Indoco ranks at 28th position in the third quarter with a market share of 0.67%. The source for this is AVAX, April to December 22. Domestic formulation business. Revenues from domestic formulation business for the quarter grew by 12.2% at rupees 203.6 crore compared to rupees 181.5 crore. Major therapeutic segments, namely cardiac, vitamin, mineral nutrients, and stomatology, performed well during the quarter as compared to the previous corresponding quarter for the last financial year. For the 9-month period, revenues grew by 0.3% at rupees 612 crore as against rupees 610.2 crore. On the international business front, revenues from international formulation business witnessed a growth of 30.10% at rupees 186.10 crore compared to rupees 143 crore for the same quarter last year. For the 9-month period ended December 22, revenues grew by 24.7% at rupees 537.5 crore against rupees 431 crore. Revenues from regulated markets for the quarter grew by 39.5% at rupees 151.7 crore as against rupees 108.7 crore for the same quarter last year. For the 9-month period ended December 22, they have grown by 28.3% at rupees 447 crore against rupees 348.4 crore. Revenues from US business for the quarter grew by 22.8% at rupees 60.3 crore against rupees 49.10 crore. For the 9-month period, revenues grew by 35.9% at rupees 194.5 crore as against rupees 143.10 crore. Revenues from Europe for the quarter grew by 58.5% at rupees 86 crores as against rupees 54 crores for the same quarter last year. For the 9-month period, revenues grew by 23.4% at rupees 238.4 crore as against rupees 193.10 crore. Revenues from South Africa, Australia, and New Zealand were at 5.4 crore, flat compared to the same quarter last year. For the 9-month period, they have grown by 16.3% at rupees 14 crore against rupees 12.10 crore. Revenues from emerging markets for the quarter were flat at 34.4 crores. For the 9-month period, revenues grew by 9.5% at rupees 90.5 crore against rupees 82.6 crore. Revenue from API business are at 16.2 crore against 19.7 crore. And for the 9-month period, they are at 47.8 crore compared to 50.3 crore. Revenue from MSI for CRO and Indoco Analytical Solutions for the quarter grew by 6.4% at rupees 4.6 crore against 4.4 crore, and for the 9-month period, they are at 15% at rupees 12.5 crore against rupees 10.9 crore. That's all about the business highlights for the third quarter, and I now request participants to put up their questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to answer to all participants, kindly restrict your questions to 2 at a time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Aditya from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Aditi ma'am, can you just talk a little bit more about the big, hairy, audacious goals that you have set for the organization over the next 5 years? And in that context, the ESOP plan, so about 3 lakh odd shares to be issued under the ESOP plan. So who are the employees who are entitled for the ESOPs? And if you could just lay out a few particulars in that sense. Thanks.
Yeah. Thanks, Aditya, for that question. Yes, the bag or big, hairy, audacious goals, as I might have said in the last call towards the ending, the organization is aspiring to get to a 5,000 crore top line number soon. And all activities across the company, from sort of broadening vision of middle management, getting their participation, even ESOP is part of that. All of those have started, and we feel very confident because at Indoco today we have several verticals, all of which have many potential areas of growth. And based on the strategic initiatives that are planned I feel very confident we will be able to achieve the numbers we have set out for ourselves. Coming to the ESOP plan, more than 60 employees at the level of general manager and above across several functions and key functions like research, marketing, and other important functions in the company have been identified to receive both for AVPs and above, which is a very senior level of management, an RSU plan for which 0.5% of the share capital has been reserved, and 1% of the share capital has been reserved for offering ESOP plan, that is to employees of GM and above. I feel very confident with this that our people will feel motivated and participate in the growth story of Indoco.
Right. So this 5,000 crore top line plan, the aspiration, it is over the next 5 years. So are you talking FY28, 27? Which year are we talking about?
Yes, 27, 28.
27, 28. Okay. The second question that I have is on the export business. So I think Sandeep sir may be able to answer that. Sandeep sir, sequentially in the US business, we have seen a decline in our rupee revenue, whereas we were under the impression that there has been some gain in market share in brinzolamide and there has been a launch of Combigan. So could you just throw some light as to what has happened there exactly? Why have we seen a decline in US revenues?
Yeah. Aditya, this is nothing to do with any loss of market share. As you know, right from 18th December onwards up to 5th of January, all our front-end partners were closed for celebration of Christmas and New Year, and every dispatch to regulated markets needs a documented okay from the front-end partner. So as a result, some of our dispatches have got delayed, and I think we are extremely well in control of the situation, and we will bounce back in the fourth quarter.
So in other words, Sandeep sir,
if I can also come in, our international business today is a composite of a portfolio mix, as you're aware. So we have sales, we have milestones, we have profit share, and we also have dossier income. So as far as the sales to US are concerned, even on a QOQ basis, we are in a better state. It is only certain milestones against other dossier income, which must have not fallen at this point exactly for earnings, because of which it appears like this.
Oh, okay. So, Sandeep sir, at the beginning of the year, I think the guidance that was given to us for the US revenue was roughly in the ballpark of 300 crores, if my memory serves me right. And what we have been able to achieve in the first 3 quarters is less than 200 crores. So would you like to sort of revise the guidance here, or do you still think 300 crores is a doable number?
Yeah. We will go as close to 300 as possible. There have been some challenges. 2 of our approvals, which were supposed to come during the year, have got postponed. One of them is the modified release cardiac product that has got postponed, and one more important product has got postponed. So as a result, substantial revenues have got postponed for the next financial year. However, we are not revising the guidance given drastically downward, but I think I'm confident that we'll do somewhere between 280 and 285 crores, in spite of these two getting delayed.
Okay, understood. Have we launched Combigan during the third quarter? Does the product sales in 3Q FY23 include revenues from Combigan?
We just launched it. We launched it in mid to end of October.
Mid to end of October. So it does include a month or two revenue from Combigan.
Yeah, about 6 weeks of revenue. Not much.
All right. And I'm assuming there is no profit share yet coming in this number from brinzolamide.
No, not yet.
So brinzolamide, probably the profit share, as you said, in your previous calls, the profit share will fall in the fourth quarter.
Yes.
That is likely, right? Okay. Okay. And the next question I have is on the cost aspect of it. So when I look at the gross margins, and I understand your gross margins gets fairly swayed by the forex income and forex loss that you report above the COGS. So even if I cull out that number, if I just look at your gross profit excluding COGS, excluding forex gains, what I notice is that our FY21 and 22, our FY21 gross margin excluding forex was actually way higher than what we have done ever in our history. And since then, we have been kind of on a sliding mode where the gross margins are consistently sort of coming off. If I were to just give you some numbers and I'm excluding your forex gain here. So your FY21 gross margin was about 71%, excluding forex gains. The same number for FY22 was roughly 69.5%. And that same number for FY23 in 9 quarters seems to be about 68%. So from 71 to 69.5 and then to 68. So we are losing 150 bits every year for the last 2 years now, 22 and 23. What explains that, and do we ever envisage going back to those margins we were doing in 21, or was that an aberration, the 21 margin?
Aditya, let me answer this first. Maybe Sandeep will add something later. For one thing, this time period which talked about 21 onwards has been a very difficult period for us, everybody in the pharma industry, because of the increase in the cost of goods, which you are aware of. So part of the reason for margin to have been lower than earlier is that a full impact of correction in the cost of goods has not come in, one. B, if you look at the nature of our business, contribution of India business to the top line over the last couple of years is lower than it was before. So now the international business is doing better than before, and their contributions have increased. But US is yet to fire completely for us to get returns on the investments. So this is a typical phase where probably the contract manufacturing businesses of Europe and their contribution to the whole, top line is, which doesn't have a very great margin element attached to it. We are seeing repercussions of that. Also, like I explained before, the portfolio and the business composition you have to think of, because in these 2 years, our collections against licensing out income and milestones, they have been going down primarily because we are now keeping the IP for ourselves. From when we used to sell it out to other partners and collect more earlier. I feel this is better for us in the longer run. So you may not see that because that is also considered a component of sales at Indoco. Okay, so that is the reason. But coming back to how fast and by when you think we will recover, no, this quarter, the entire profitability which has got impacted by the MTM losses of about 14 crore has created quite a slide in the numbers, and people must have wondered what it is. So I just looked at the YTD performance on that front. And, if you look at our YTD performance, if you look at the earning that has come from an exchange gain on YTD basis, we are now equivalent because this year we have gained 24 crores as against last year 26 up to, 9-month period. You must also remember that the last year's 9 months included a first half year which had very, very low expenditure for India business. So, quite frankly, I think it is very important for us to stay focused on fundamentals of how we grow our sales, whether any specific costs which are really operationally sort of part of our sales, have they shot up for any reason on a QOQ basis or a YOY basis? Those are the areas we should look at to analyze performance. This is what I say. Sandeep, something?
I just wanted to add, Aditya, what we expected about the procurement side, that's the purchase of API and high consumption packaging material and other costly excipients, has got delayed. The benefits accruing out of that And we are seeing those benefits coming in just now, towards the end of December, beginning January. So the effect of it largely will be seen from Q4 23 onwards. And that effect, as you know, the material effect of it is quite substantial. So yes, I agree with you that margins were a little downsided, but we should be recovering from Q4 onward.
Sandeep, my question actually, sorry, I just want a clarity on this. Can we do that? And then I'll go back in the queue. Thank you. Actually, I understand Aditi ma'am's explanation. The only cross question I have there is that I am looking at margin excluding the forex gain and losses. So therefore, forex gains isn't really what impacting. Actually, as you said, what is impacting is the raw material prices and the packaging cost. But what I had expected was that this year, since we were taking price increases in our India portfolio, we would have gained some of the lost margin back. But that just doesn't seem to be the case that the numbers are telling me, because the numbers seem to...
Aditya, we've taken around our net price growth comes to somewhere between 5 and 6% for India business. And like I said, India business contribution to the top line this quarter in particular has been the least over the last 4 quarters.
Right. Understood. I'll get back in the queue, ma'am. Thank you.
Thank you. We have our next question from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Yeah, thank you for taking my question. Ma'am, can you please help us understand the other operating income in terms of your hedges? I mean, normally how much do we hedge and how does this entirely take place on a quarter-to-quarter basis?
The hedging policy is that we hedge currencies to the extent of 55 to 60%. All the 3 currencies, US, Euro and GBP. And our median rate for hedging of US is 81.79, Euro is 93.09 and GBP is 105.83. So the policy is very, very clear, and largely hedging of these 3 currencies has stood us in very good light so far.
And if I look at the previous quarters, I mean, the other operating income was close to 28 crores in the previous quarter. So apart from MTM, what are the other elements that we book? I mean, if you can break it down, say, for the second quarter and the first quarter this year.
Export incentives.
Yeah, there is a small amount of export incentive which has started trickling in now with the ROE, TPT coming back.
What is called commonly as road tax, that has been reinstated to the extent of 2.5%. So
it's largely exchange only.
It's largely exchange only. That's why we have suffered a loss this quarter. This is MTM.
Notional, actually.
Notional, yeah.
And so, I think when we are talking about, gathering momentum in the next 5 years as far as this is concerned, one is, as ma'am alluded, that, the US is still not optimal and there can be operating leverage on account of that. I mean, we are also seeing the extent of other costs not being as comfortable as what one would expect. So, I mean, I'm just not looking at, say, next quarter or the next couple of quarters, but assuming 3 years and 5 years now, I mean, today, if you are looking at our gross margin, I mean, we are anywhere between 68 to 70%, which means that a large part of the cost is primarily the non-gross side. So to that extent, as the sales go up, say the next year and the next couple of years, can you give some color with respect to how do you see the margin trajectory, say, in a few years?
Yeah. So while I may not be able to give you exact numbers on the margin expansion, let me tell you a little bit about what is happening across the organization for better efficiency, which is going to result in margin improvement. Okay. So let me come to the India business first, because that is still the largest single component for us. It's close to 55% this quarter. And in India business, as you know, our largest fixed cost is by way of the people and their salaries. Incentives in India is, of course, variable. And we have around 2,300 people in the field. Over the last year, various initiatives taken by us which include call-to-call reporting, which has improved discipline working of and eased working of the field staff. We have, as I already said, just started with the digital options in field. And going forward, there are several initiatives lined up and several MIS we are looking at where we can factually measure performance of not just field staff but even managers in the field. I feel confident because of this, our return per man will really grow from here. For the YTD period, our PCPM for people on payroll, not the number that we should have on payroll, is close to 3.9. That we have done for a very long time. However, the vacancies and people who are not on payroll, they do impact our sales indirectly. So several initiatives in the India business are being taken, because of which the per man return will go up, and when that happens, margins on India business will also go up. Secondly, if you look at the product mix for India, if you look at the performance of the current set of products, around 50% comes from pure acute therapy, another 13% comes from pure chronic, and the remaining is subchronic. And if you look at how the growths are coming in, last year was a one-off year because acute did very well. But otherwise, the fastest growing is the subchronic, followed by chronic, and then acute. Now, when this happens, your return for prescription also increases. That in turn causes PCPM. And all other costs get spread. So I therefore feel India business will get profitable in the years to come. In addition to that, several initiatives are being taken to look at the, many of our products which have a very good sort of potential with direct to customer and direct to consumer kind of potential. And we are looking at various initiatives in the supply chain itself, based on which I feel confident that we will be able to grow those products. Coming to international business, we already discussed. As the contribution of US to the entire international business starts going up and coverage of operational costs is happening, you will see a very different picture. Plant 1, which I spoke of earlier, we just had a US FDA audit. As you all know, we're not able to supply additional products to US from that plant for the last almost 4 years. And that has meant that the highest margin business, which is the US business, pitiful. I mean, I think YTD basis we must have done only 6 crores from that site. So you can imagine, while all preparatory work to move business manufacturing and supplying to Europe to Baddi, where batch sizes are much bigger, efficiency is much better, all of that is in place, but we are not executed for want of FDA to allow us to make more products. So when all of this you look at, and the fact that even when it comes to commodity manufacturing, whether it's for Europe or US or the backward integration that we are doing, incidentally we won a tender on allopurinol with Germany. Probably it will come in next quarter when we talk about it. We just got cleared by New Zealand for allopurinol tender. We are backward integrated on allopurinol, and we are also supplying allopurinol in US. So there are good kind of collaborative consistencies that are happening across many aspects of the business, and I feel very confident on account of all this, the margins will go up.
Sure, ma'am. And just one final question before I join that is on the India business. We have been taking a lot of strides in terms of equipping our MRs, rejigging the business, the divisions, and several initiatives. I mean, with respect to prescription, I mean, are we seeing incremental prescriptions meaning more towards Indoco versus what we used to do say 3 years ago?
Yes, certainly. If you look at our ranking on prescription perspective, we are ranked 20th in the industry today and growing faster than the industry on both fronts, the prescribers, that is the prescription base, and the number of prescriptions. So from a perspective of how many doctors write our products, as well as how many products or prescriptions are given by each doctor, we have now actually reached a very important milestone of 1 million prescriptions on an annual basis, and that puts us at a very high level on the generation of prescription front. Of course, since much of these prescriptions are for acute, 50%, it doesn't translate into the kind of top line it should. But it's a very, very steady and disciplined kind of return for our legacy products. In the second quarter this year, there was a time when Cyclopam, which is such an old legacy antispasmodic product, was growing by 60% on prescription. I think that is a really great achievement for our acute therapy division. And when I say contribution of chronic, subchronic sort of almost stays the same, it is simply because acute is also growing as fast on that very high base. So the health of India business on prescription front is much better. Even our dental portfolio, which is least dependent on prescription for return, even there we have seen substantial growth. So that's the answer. I hope that satisfies you.
Yes, ma'am. Thanks a lot. I'll jump back.
Thank you. We have our next question from the line of Mitesh Shah from Nirmal Bang Securities. Please go ahead.
Thanks for taking my questions. My first question is regarding the EU. EU has shown the strong sequential growth of around 15%. What is the major reason? As you said that UAs are facing some supply constraint because of the client are enjoying in the holidays. What is the reason for strong growth of the EU?
See, all the traditional products as well as the new products which we have introduced have shown very good demand across Europe, Germany, Spain, UK, everywhere. So that's the reason the business has shown consistent growth. And I clearly remember in the first quarter, this question had come up, and I had assured the analysts and fund managers that Europe will do consistently in this year, and that is happening now. In fact, like Aditi mentioned earlier, all our high growth, fast moving and voluminous products, we are transferring them to Baddi 1 and Baddi 3, where batch sizes are large. There's much better control on efficiency, and in all our plants, we are going in for higher automation to bring down the casual manpower. So you will see international business profitability going up consequently.
Got it. Regarding your aspirational target of 5,000 crore, can you bifurcate between the geography, how much you are expecting from the domestic or the international market? And do you have factoring the competition going forward in the US market as well in these expectations?
So I will not give you an exact contribution-wise thing, but let us surprise you a bit as we go forward. We start calculating EBITDA right away based on geography. So we will wait, and you'll be pleasantly surprised. I will only say that. Coming back to your question on competition in US, today Indoco is at a point at a very good position, I would say, where we have a kind of business in US which is a composition of various kinds of models. So while we sort of contract manufacture after collecting, licensing out dossiers or our ANDAs, we contract manufacture for some very large pharma. We also participate by way of cost and profit share with some very big generic companies. And then there are some products which we have gone on our own, although not with our front end. So as we balance all of this, we are somehow therefore able to better manage any kind of impact of drop in prices in US as of now. Added to that, a large part of our sales to US comes from the very difficult to manufacture and develop products in the sterile space, be it injectables, be it ophthalmic, where the kind of price pressure we are looking at in solid orals has not been there, simply because if you open the FDA site at any given time, I think most of the shortages are in this space. So, people recognize and understand that it is not possible to expect these products to be supplied at any kind of cost plus. So we have a very nice niche when it comes to US. And as we go more and more by ourselves, more and more into models, whether it's cost profit share participation or licensing our products with a certain amount to be given against marketing. And eventually with some kind of a front end, I feel our journey in US, at least for the next 5 to 6 years, is not threatened by some of the things that you have told us.
That's great. Thanks for the answer. And just bookkeeping questions about what is the M2M loss or gain last year, same quarter?
Last year, same quarter, I will come back to you, but YTD basis, MTM gain last year was around 26 crore. And this year on YTD basis, it is 24. So, it changes on Q or Q, so it's not exactly, okay, this quarter. Yeah, for the quarter I can tell you. Last year it was a gain of around close to 9 crore as against a loss of 12 after impacting for other operational revenues. So totally it's an impact of 20 crore if that's what you're asking.
Absolutely. Yeah. Thanks for the answer. That's it from my end.
Thank you. We have our next question from the line of Aegis Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. My first question is, the following, that, Sandeep, you educated us that brinzolamide, when we sell through the partner, typically it's a 2-quarter lag, and that's when we get the revenue. So, the profit share from the agreements that we have. So if you could, speak a little bit more on why the delay, because you seemed very confident in the last quarter about the brinzolamide profit share kicking in from this quarter. And also, is it fair to assume that, you've now called out the US revenue at around 280 crores? So given the run rate where we are, whatever incremental that we get, say, the profit share, a bulk of that, say 90-95% will flow through right to the bottom line. Is that broad understanding correct? And also, as you mentioned, the average rates, right, of US, Euro, and GBP earlier, if you see the fluctuations of all these currencies in the last quarter and compare it to the quantum of the loss versus the revenue realized, it's almost 9 to 10%. So, the 13-14 crores that you're talking about and the revenues from the regulated markets are whatever, 140 crores. It's 10% of that, and the swings have not been so, drastic as the quantum of this 10%. So could you please quantify all of this?
Coming to your question specifically on the currency loss, that's the MTM loss, these figures are given to us by the bankers, the mark-to-market losses. So we have very little say in it. And as Aditi mentioned to you that in this quarter, last year, we had a profit of 9 crore against a loss of 12 crore about this year. So 12 plus 9, 21 crore is the impact we have had this year. And that primarily happened because of euro and pound, two currencies. So that is about the MTM part. And about brinzolamide, brinzolamide supplies have now smoothened out totally. And always there is a lag while sending us the profit statement. So for the quarter ended December, the profit statement will come only by end of January or first week of February. And that is when we'll realize the profit share of Q3.
Another thing I may want to add, which you might have missed, I explained earlier. Our US business in particular comprises of commercially manufactured product sale and also of services income, which includes sale of dossiers or out licensing income or collection of certain milestones. Now that part of the business has actually shrunk as a percentage of total sales, and this is with the correct intent, because Indoco of a couple of years ago was licensing out everything. Indoco today would prefer to keep the IP for ourselves. So this is a kind of an intended kind of a shrinkage of service income, which, as you know, is having much higher margin than a commercial sale. But over a period of time, we will get much better returns from this portfolio. I hope that explains it.
Yes, ma'am. Could you quantify what is that out-licensing income which was there last year around this time and which is absent, or even the quantum which is not there?
Yeah. Roughly, we used to do around 20 crore every quarter last year, if I'm not mistaken. Yeah, that was it. 1 second. Just give me a minute. I'm getting the numbers out.
Sure.
Which has come down this year. So there is definitely a gap of around 5 crore this year on YTD basis on account of income from those year sales. Yeah.
Got it. So basically, you've chosen to retain those dossiers which otherwise you were out licensing.
Yes. You will see that eventually come into profits for the organization.
Right. No, I get you. Ma'am, could you also quantify what is the capital employed today in the US, Europe, and India? Just these three broad geographies, or even if you could give it of India geographies and international geographies.
Right. So like I said earlier, much of the infra costs go towards Europe and US business. Again, we have steadily moved how and where we use our infrastructure. So the plants in Goa are now slated for use to US, So it's difficult to quantify because they were used for Europe earlier. But the Baddi plants are going to be used for Europe. The Aurangabad plant is used for emerging markets. Goa, all the three sites we want to use them only for US. Once that happens, much of the issues you see today with profitability, etc., will get corrected. So the gross block, if you want to know, Goa 1, 2, 3 together today is around 440 CR. It's difficult to put it to any one geography because it was used, much of it for Europe earlier. Now it will be used in future for US. And the Baddi sites between them is 120 crore, which will now be used for the European business. Coming to India business, we make products for ourselves as and when there is capacity available and if there is a complicated product which we should make ourselves. But otherwise, we outsource manufacturing. So our costs for India business are largely related to the fixed costs associated with the field. And there, as you know, because of inflation and other things, we've had to give decent rises every year, whether our volumes grow or not.
Got it. And Sandeep sir didn't answer that question on the incremental profits from brinzolamide flowing through to the profit. And just wanted to add one query there that you seem very confident of this profit share, and I understand that it's a complex situation with the partner and it's subject to sales. But does that does that confidence continue for the profit sharing to come through in 4Q, or are there ifs and buts also that could sort of play out in the fourth quarter for the profit share?
Yeah, I'll just maybe give some more clarification on brinzolamide because I think all of you are very eagerly waiting for us to succeed with that product, and so are we. So there are various volume field strengths for brinzolamide as a product. And the largest market is with a product of a fill volume, which is yet to, get sold in the US market, although we have supplied it. So that is why the lag is coming in. We had some challenges here in the manufacturing plant. I don't know how many of you are aware, but a lot of ophthalmic products, USFDA is now declaring them as medical devices and not as formulations, simply because of the complexity of the container closure systems, the complexity of manufacturing. And having had our first warning letter at plant 2 on those issues itself, we are exceedingly careful when it comes to being on the compliance side, and we bend backwards. So on account of that, both Teva and us have been exceedingly over careful in supplying product to the US market. That has resulted in a delay in supply of a particular strength. And that's why I think when you look at brinzolamide, you look at the whole market. When we say the supply and sale has started, it is actually in the smaller market. So the real returns are yet to come from both sale as well as margin.
There's another point which I would like to bring to your attention. There was another product in partnership with Teva which was due to be launched in the month of November end, and that got delayed.
So you're talking about Combigan only, right, sir?
No, not Combigan. We haven't given out the name of that product.
Okay.
That has got delayed, so the milestone attached to that product should have easily come in before 31st December of about 10 crores. That has got delayed into April. So these are dynamic factors which are beyond our control. But we would like to assure the street that we are firmly in control of the situation as far as the business is concerned.
Got it. And sir, could you respond to the incremental profits flowing through to the EBITDA line?
On Combigan?
No, on Brinzolamide, which you're expecting in the fourth quarter, the deferral that happened.
We'll wait for that to happen. As you might have seen, our past commitments might have put us in a position today where, a kind of a delay accruing those may look like an inefficiency for the organization, which is beyond our control, really, many external factors. So you'll be the first one we will share with the moment it starts happening.
Yes, ma'am.
Fingers crossed for the next quarter.
Got it. Ma'am, the 20% guidance on EBITDA stays?
To come back in the queue, sir.
We are right now, I think, I'm very confused with the with and without operating income, but looks to me like this quarter, without the other operating income impact, standalone this quarter we did close to 18%, and standalone last year for the same quarter we did 18.5%. So actually we are now level, if you ask me. Where what would have seemed like 21% last year was actually 18.4 without the other operating. So if you say consistency of performance, we are already delivering what we did last year, but we hope to further improve it. The last quarter is generally a big one for both India business as well as emerging markets. Both are very high margin businesses for us. Let us see if we can improve it. We'll definitely be trying.
And if you remember, during the first quarter this year itself, we had said that we will try and protect the EBITDA. Our words were very, very clear. Of course, we are trying to improve it further, but definitely we will do as good as what we did last year.
Got it. Thanks so much. All the best.
Thank you. We have our next question from the line of Rashmi Sancheti from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. One question on Europe, since, the tender for German tender for allopurinol has already got over in December month. How do we see growth, for FY24 and FY25? Are we going to get renewal of the contract? If yes, what would be the size and, what could be the sales that we could generate for next 2 years?
Yeah. Rashmi, it's this way that currently we are still supplying right into January 23. The supplies are for the old contract, and we have just got news in December that we have won the contract again for another 2 years to the extent of 90.5% of the total market. So that being the case, about 65 to 70 crore would be the value of allopurinol Germany per year for the next 2 years.
Okay. And apart from this, any other tenders that, are on a verge of getting renewal this year?
We have applied for 2 more products, but there's no guarantee that we'll win it. We are, however, very, very optimistic because of our backward integration. The APIs are also manufactured by Indoco, and that is the reason for our optimism.
Okay. So then how do we see the growth from here on? Do you think that, we would still continue with that 20% sort of growth in 24 and 25 also?
Yes, Rashmi, we are very confident of 20% growth for Europe business. In fact, we are controlling some aspects of what we do for Europe, which are on the lowest margin side, possibly a product like paracetamol. But like Sandeep explained earlier, by moving it to a site, the batch size has become 3 times the earlier batch size in Goa. And there is a much better control on overheads, etc. I think even that product will do better than it did last year. So various initiatives are being looked at as we prepare for next year's budget. And I can assure you that 20% is a done thing for Europe to grow.
Okay, ma'am. And, in the US business for FY23, currently we have not booked any profit share from Brinzolamide till date, right? Only in FY23?
I'm sorry, what was the question?
In FY23 YTD, we have not booked any profit share from Brinzolamide.
That's true.
Okay, so you're saying that the entire profit share would come in quarter 4?
Based on the sales. I explained earlier that there is one particular strength of fill volume which has gone from our side or is going just now and which will be further sold. So I think when you look at the market share of brinzolamide, of Teva, etc., you're looking at the whole market. Just to tell you that there has been some delay on account of a caution from our and Teva's side based on certain happenings with the container closure system. And it has not just impacted us, it has impacted many people in this industry. So there has been a delay, that is for sure, and we expect profit shares to come in as and when as the sales happen.
And ma'am, on Combigan, sales would incur in quarter 4. I understand that, but the profit share from Combigan would only come in FY24. That is what you are...
Correct.
So there is a lag of 1 quarter for that particular product, or it is like, again 2 quarters or 3 quarters lag?
So like I said, it all depends on how much they sell per quarter, right? So our transfer is not their sale. It has to further be sold by them, after which the discounts and everything happens. When the profit shares get calculated, then it comes back to us. So we'll share it with you as and when it happens. We'll be most happy to. Yes?
Okay, ma'am. Thank you. That's it from my side.
Thank you. We have our next question from the line of Puneet Mittal from Global Core Capital HK Limited. Please go ahead.
Hi, thank you for the opportunity. My first question is with regard to your aspirational target of 5,000 crore, what would be the capex required for that kind of top line? And what are your internal ROCE targets for these capex?
Yeah, so that's a very good question and very interesting one. Already at Indoco, several initiatives have been started to increase capacity at various plants. As you know, today we have 8 manufacturing sites, of which 5 have USFDA approval. And while there are several solid oral sites for the company, there is only one sterile unit. So there are a couple of things happening here. One, we are increasing capacity at that site by adding additional packing lines, which is not going to be a very big capex, but it will be a substantial one all the same. And in addition to that, the company is definitely having on the drawing board a second site for sterile. And we are very confident that these investments will have a good break-even in the years to come. So they are being planned. As I said earlier, the lower margin manufacturing of solid oral to Europe on contract, which is one of the smallest, which is still continues to be a substantial business for us. That business is being moved to the Baddi site so that more capacity at US is freed at Goa is freed for US. I don't expect to add any capacity further for the European business, but definitely for US, as and when there is a need, we may expand. This is the plan, and most of this will happen over the next 3 to 4 years. So it is not going to be a sudden shock in 1 year for the company.
Thanks, ma'am. But can you actually, it will be very helpful if you can quantify in the sense that currently if we see that the gross block turnover is about just over 1. Now, naturally, some of the plant capacities are not fully utilized, so you will ramp up those things and optimize those plants. But what would be the capex requirement? And second, again, what are your? I'm sure you must have ROCE targets on these capex. What are those targets?
Ideally, with the US business kicking in, we expect to do much better on return on capital over a period of time. Roughly looking at the kind of investments we made in the past and our understanding of what is needed for the future, I think one can expect an investment of close to 300 crore to happen further to support the increased share coming from US. Today our ROCE is at 13, and I think we will be able to rest at anywhere between 10.5% at the point where we do 5,000 crores.
Okay. Second.
Mr. Mittal, we've lost the connection of Mr. Mittal. We'll move on to the next question from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Yeah, hi. Thanks for the follow-up. Aditi ma'am, you said ROC will be how much by the time you achieve 5,000? I missed that number.
Around, today it is around 13, and we can go up to 15%.
15%, okay. All right. And you said, what was the total gross block in the 3 Goa plants put together?
Around 440.
Around 440 crores. And if it is all dedicated to the US, then your revenue in US this year is going to be ballpark 300. So your asset turn on the US is like 0.7x as at this point in time.
Because today it is not entirely for US, no? Yeah.
Exactly. No, I know that. But once you shift the production for Europe to Baddi, then, this is what you're left with. So, yeah.
Aditya, I'll just come in here.
Yeah.
Plant 1, for example, is supplying only glimepiride tablets to the US.
Yeah.
So eventually that full capacity of plant 1 is available for US.
Yeah.
Yeah, I get that. What I'm getting to is that whatever revenue you make from Goa plant, you will shift that revenue to Baddi because Baddi has that incremental capacity which you can use to cater to the European market. So the long-term plan is that all of the Goa 1, 2, 3 will be for US.
The increase in sterile manufacturing capacity. Solid orals we are not going to need much more.
Correct.
Right. So that's what the question was. So if in oral solids, let's say your revenue today is X, with your current capacity, what revenue can you do in the US for oral solids through the Goa existing infrastructure?
Total revenue from the gross block, if you go by at 15% today, would work to, I think, 1,000 crore, 1,500? Yeah, right. 1,500 crore.
1,500. That's including oral solids and sterile from Goa.
Yeah.
So till the time you reach 1,500 in your US sales, till that point in time, Goa, other than a few packing lines, wouldn't need any material capex.
Kind of, yes.
Right.
Possibly a little bit in sterile because, it takes time to build a plant, then get it approved. So we may not wait to lose opportunity. Okay?
I get that. That makes sense. Secondly, on the comment that you made that now US FDA is looking at ophthalmics as a medical device due to the process of making the product and the dispensing of the product through the containers. Does that change the approval pathway for how FDA treats ophthalmic ANDAs? Does it make it tougher, easier? Could you just comment on that?
Yeah, sure. So Aditya, fortunately for us at Indoco, because our first brush with FDA of a not so favorable kind happened on a latanoprost packing material issue. So at Indoco, as part of remediation action itself, we had got to the level of compliance and sort of creating dossiers for our packing materials, etc., as per US FDA expectation. So what we are seeing now is whatever we were doing has now become a requirement. So we are well sort of qualified in that manner. We will not need to do much more. We already have work done on almost all our ophthalmic products on the container closure system because we had issues with them. Yeah.
Right.
So that is all right, and I don't expect. Actually, this is favorable for manufacturers like us. Because every time a container closure system manufacturer would make small changes in his material of construction or his molds and not report it to FDA or to us, it directly or indirectly impacted our product quality. So now he will have to do it through a regulatory pathway. So we stay protected actually as consequence of this.
Understood. No, that makes a lot of sense. Just one last question, if I may. On the India business, though, so, this year, I think now, Aditi ma'am, your budget would be what, around 800, 810 for FY23 on the India business?
We are already at 613, Aditya, and we have been consistently doing more than 200. In fact, our third quarter, we've done 203, which is almost equivalent to what we did in the second quarter, which we never do. And looking at the changing product mix, there is no reason why we cannot still go after close to 830.
830. So your fourth quarter, you're saying, which is generally seasonally the worst quarter for you. You're saying the fourth quarter could actually do 220.
Yeah, because the product seasonality has come down as contribution to the wholesale.
So you're saying you can do 220 crores in the fourth quarter, basically, yeah. And that's going to be sort of a sustainable change in the way you do India business, because these product introductions that you're doing are not one-off introductions. These are sustainable product streams.
Correct.
Right.
Correct.
And for FY24, ma'am, given that you're not expanding field force, what sort of growth in India business do you expect?
So Aditya, we'll talk about it when the time comes, but surely as part of this big aspiration, you will have to agree that all 5,000 is not going to, when we get to 5,000, India will not stay at 800. I hope you agree with that. And the contribution of India business may not stay at 50%, but it will definitely go up. So there are plans of some kind of restructuring. There are plans of looking at, as I said, direct to customer. And there are plans of, using these changed models in supply chain to our advantage. So you will see a lot of change in the way India business operates, and I'm very confident we'll do well.
Sorry, ma'am. So just to check what you said. So you said when you reach 5,000 eventually, India business will be more than 50% of the top line, is it?
No, I didn't say that. I said that it will not stay 800.
Yeah. But what would the mix be like between exports and India?
That's, like I said, let me surprise you.
Okay.
Safe to say that we will ensure that even if India business does not contribute 50% of top line, the other business contributing largely to the top line, which will be US, will deliver on similar margins as India or more.
Right. Okay, ma'am. Thank you. Thanks for the input.
Thank you. We have our next question from the line of Puneet Mittal from Global Core Capital HK Limited. Please go ahead.
That's fine. My questions have been answered. Thank you so much.
Thank you. We have our next question from the line of Meg Shah from Prospero Tree. Please go ahead.
Hello, am I audible?
Yes, please go ahead.
Yeah, thanks for the opportunity. I just have a simple question about the inspection that was conducted in the Goa plant. So, what is the status as of now, and how would it impact on the supplies and the revenues from that facility?
So, this was an inspection for a site which we were actually waiting for the auditors to come in. Current supply to US from the site is very small. YTD basis, we must have done around 6 crores on that site. So dependence on that site for US is not very high. Also, there is, even if we had a warning letter earlier on this site, there was no stoppage of manufacturing supply from that site. So as regards the audit or any sort of outcomes of the audit, it is not going to change in any way the current supply to US. What we are actually hoping is once we are able to resolve this, we will be able to get more approvals in the future, and that's what we are hoping for. Yeah?
Okay, yeah, that was from my side. Thank you.
Thank you. We have a next question from the line of Vishal Manchanda from Systematics. Please go ahead.
Hi, and thanks for the opportunity. Ma'am, are we expecting an inspection on Unit 2, sterile facility, anytime now?
So typically they come every 2 years, and from that aspect, because of COVID, they're not coming, so we should expect it. Also, within Plant 2, there is a Plant 3 in the same FEI number, where we have certain past, as in prior approval. So we are expecting them to come for that. So they would come in, I guess. It's part and parcel of our business now.
But how do we ensure, like, because sterile is a much more important facility for us in terms of growth and existing revenues. So, like we have received 9 observations at Unit 1. And how do we ensure we come out clear for Unit 2 and Unit 3?
Yeah. So I think it's best on such calls to not give any assurance that we will come out clear or not. But I can tell you one thing, that the way we work at Indoco now, because of the learning of the past, is that there is a lot of overarching done. So whatever improvement issues must have come up in plant 1 as part of these 9 observations, they are rolled out to all our sites. So I don't expect any of those points to again come up at the other side when they walk in. Okay? So that's how it happens. Also, our quality management system, we have been really improving it over the last 5 years. So consequence of that, it's not that you will not get observations, but I think what the auditors will be looking for is to see whether the current quality management system is robust, so that you internally understand whenever there is a glitch and then you attend to it. So the number of FARs you file, the number of recalls you do, all of that is an expression of a good quality management system. So I feel confident that we are better able to manage quality than before. All the same, when the auditors walk in, if there are any improvement issues, I'm sure we'll have observations. We should not be afraid of it.
And we have not seen any product recalls in the US in the last 1 year. Is that
there are on and off. All you have to do is Google us and you'll see how many recalls. Because as I said, don't always happen because we have done anything wrong. They also happen because a container closure system manufacturer defaulted, or something happened to a material that went into making the product, or a leaching issue in the color of the ink used on the label. So we learn as we go, and I think we know, and FDA also understands that manufacturing of steroids is a very difficult job.
And on brinzolamide, are we completely sorted in terms of the challenges we had witnessed in the past?
Yes.
So supplies should continue normally going forward?
Yes.
Okay. And any color on the new approval that we have seen in the US in partnership with Teva in terms of the size of the opportunity and the competition in that product?
I'm not comfortable speaking about it yet because it's part of our agreement of non-disclosure.
Okay. And just one final one on brinzolamide, for the profit share to come in, is there a cumulative sales benchmark that has been set, like profit share shall accrue only after a certain cumulative sales will be realized?
No.
Okay. Thank you. That's all.
Thank you. We have our next question from the line of Yogesh Tiwari from Arihant Capital Markets. Please go ahead.
Thank you. My first question is if you can share some details regarding the pending approvals, if any, at the Goa plant and the Baddi plant.
Baddi is supplying to Europe just now, and we are shifting a lot of products from Goa there. So we are aware of what is pending, maybe a one-off product in a particular European geography, especially post-Brexit, because you now have to have separate approval authorities coming in. Those kind of decisions might be pending. But coming back to Goa on pending approvals from Plant 1, we have several products filed from Plant 1 in the past, which will go off patent after 2026, 27, 28, in that time period. And I am confident by then we will resolve issues of Plant 1 for US, so we will get our approvals in time. Currently, there is a product which we might have lost out on time. That I don't mind sharing with you. It's pregabalin capsules, which is already off patent, and had FDA cleared us 2 years ago before COVID, we might have been supplying that. So that is a kind of opportunity we must have lost. Other than that, from the other plant, which is the sterile unit, there are already, let me just come back with the number exactly. We have in total today around 25 products pending approval, of which totally, this is across all our sites, for US ANDAs, where 10 are our own. Okay, and they are a mix of both sterile as well as solid. Does that answer your question?
Yeah, sure. And just one last question. So it's like we had a very good European business, and we also supply paracetamol in UK. So just wanted to understand, there has been a lot of noise around paracetamol in this quarter. So how is the current demand for this drug as of now in UK?
Current demand you're asking about?
Yes, sir.
I think demand is consistent.
There was a certain time, I think, post-COVID, when there was a lot of supply and then stocking. But I think all of that is behind us.
Yes.
Now we have an excellent relationship with Perigo, for whom we make this.
Yeah.
Largest partner we make it for, where a proper 6-month rolling plan is with us. And
Absolutely, yes.
I don't see any concerns there. When I discussed a lot of paracetamol, it was simply to say possibly going forward we would like to make less of it if capacity issues come up at Paddy. Okay?
Yeah, so just wanted to understand, like, there were news of shortages of paracetamol in UK and France for this quarter. So is that still the situation remains the same? Or
I think our partners take care of it. That is how our logistic planning works. So when we supply their stock, and that is how both earlier Galfarm, which is now Perigo because they acquired them, has managed to get such a high market share. It's because of the partnership and a good relationship and good working of inventory planning between both of us. So the logistics are taken care of. We have any given time a 6-month sort of knowledge of 6-month orders which we need, and there is consistent supply, and I don't see any problem. Let me just check. I think we are okay.
Yeah, there's no problem.
Yeah.
Thank you very much. That's all from my side. Thanks.
Thank you. We have a last question from the line of Sajal Kapoor, an independent investor. Please go ahead.
Yeah, hi. Thanks for the opportunity. Good afternoon, everyone. Aditi ma'am, question on our CRO capacity ramp up, which I think is currently in progress, right? And when does it complete, and how much external sales can we generate from this, please?
Yeah, it is. The expansion is actually completed. We have added 48 beds to our earlier capacity of 98 odd. So we are close to 150 beds now, and that allows us to do many more studies.
Yeah.
And given that 60% of the entire capacity, the old capacity of 98 beds we were consuming, we now feel more confident to be able to generate more revenues from this business because we will be able to attend to more external customers. Does that answer your question?
That's helpful. And yeah, it does. It does. Thank you. And one clarification on this ROC question. A couple of participants earlier have asked, but I'm not too sure if I'm getting the right handle on this, because your response was slightly confusing. Even to Aditya, you said that from 13% we'll go to 15% when we get to that aspirational target of 5,000 crores. I mean, my calculation today says that you are currently in above 20% ROC as on fiscal 22. So last fiscal, if I do your total gross,
No. The ROC as on 31/12 is 13, and same time last year it was 15.
All right. So I was looking at the standalone, right? So
yeah.
1 second. Right. So from 13%, after all the operating leverage and everything has been taken care of, we aim to go to 15.15. Is that correct?
Yes.
But ma'am, that's way below the industry standards, right? I mean, we are not in a commodity business. We are branded formulations, right, with backward integration into APIs.
I don't know it's difficult to find parity at industry level on such parameters. But if I understand correctly, roughly today it's 11.9%. Close to 12% is what industry overall does. Unless you are purely in India business, where infrastructure investment is not there.
And would you be open to disclose your India business or operational metrics and outside India separately as a line item?
We don't do that, no.
Yeah, currently you don't do that, but in future, would you be open to that? Because our India business is at a completely different ROE, ROC, like just about any other player.
Yeah. So unless we carve it out as any kind of separate business, I don't see any reason for us to do that.
Right. Okay. Thank you, ma'am. Thank you.
Yeah.
Thank you. As there are no further questions, I now hand the conference over to management for closing comments.
So thank you everybody for that very, very interactive and interesting 1 hour 20 minutes. I think the longest call we've had for a very long time. Once again, wishing all of you a very happy new year and looking forward to many more interactions in the future. Thank you.
Thank you. On behalf of JM Financial Institutional Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.